Are interest rates going to implode the real estate market? It could happen. Let's talk about what's going to happen. But first, we need you guys to go in, like, and subscribe so that you can never miss an update on the real estate market. So what's up, you guys? Justin and Michelle, and we're here to talk about interest rates. They've gone up again. And it seems like that is kind of the new trend right now. So is that going to implode the real estate market? Justin, what are your thoughts? What is it going to do to the real estate market?
So last time we saw rates 6% sometime in July, and it stayed there briefly, went back down. Now we're at like an 11-year high on interest rates.
Yeah.
The economy just simply isn't slowing down enough with inflation. So they've continued to raise rates. And of course, the Fed's going to announce their rate raise here next week sometime. And this is kind of in preparation for that because there's rumors that they're going to raise it 3/4 to a full point to slow things down enough to where they need it to do. And of course, that's not great news for the real estate market because as rates continue to go higher, it's going to price more buyers out of the market.
Yeah.
So it will definitely slow things down. But because we've already seen a stabilization here in Utah, it's not getting us close enough to where we'll continue to see a major impact.
Yeah.
It will slow things down, but not crash it, if that makes sense.
Right. Yeah, that makes sense. So I have a little bit of a fun fact for all of you guys today before we get into our next topic, but I call this guy the real estate Rain Man. He's kind of a real estate psychic a little bit. He can predict things before they happen. So because I know this about him, earlier this year in March, he made a prediction about interest rates and I filmed it. And if he's correct, which it looks like he may be, we're going to release that. So stay tuned for that. But his prediction was, can I say it?
Yeah.
Okay. Sure. Rates in the 7s by the end of the year. So that sounds really scary. So Justin, if your prediction is accurate, what's going to happen?
So yeah, if rates go to the 7s, which I mean, the reason why I said that was because that's kind of where I felt like they had to be for inflation to get under control. And what I did was I just looked at what they did in the history from 1982, 1983, and saw how much they had to raise rates. And I basically took that formula and doubled it, or they raised rates 2.5 times of what they were before inflation started to get crazy. So that's what I did. They were at their low, high 2s.
Yeah.
I did 2.5 times, and that put us at about 7% is what it would have had to be. So if it gets to the 7s, I think that is a pretty big sticking point for buyers.
Yeah.
That's the part where it starts to get scary in terms of like, I think that probably for sure brings a recession.
Yeah.
And, you know, the way buyers are priced out, we don't have a lack of demand for housing here in Utah.
Yeah.
People want to buy houses. Prices have dropped 6.5% overall. And so now that affordability is getting more in line of what it should be. But when rates go to 7, that's when panic starts to set in. That's when people are going to really promote a crash versus a correction, which is what we've been saying. And I kind of have this cool little graph that I'll just pull up for everybody. When you had a 3% interest rate with 20% down, you could afford a $721,000 house. At 4%, you can only afford a $649,000 house. Wow. At 5%, only a $557,000, and at a 6%, only a $533,000.
So basically, it's just knocking their affordability down. Like they don't qualify for as much,
no.
right? Yeah.
So many, 70% of home buyers are priced out of the first-time home buyers are priced out of the market. So.
Wow.
If they stay here at 6, yes, it's going to hurt a little bit, but don't worry, nothing's going to crash. Prices will probably have to drop another 1% to 2% to maybe compensate for that.
Yeah.
If they go all the way to 7, I think prices have got to compensate another 4% to 5%.
Yeah.
Which would put us at a 10% drop from our peak if that happens.
Interesting. Do you know what I want to start? A hashtag, correction, not crash. You heard it here first.
Correction, not crash. And I think that's kind of how you can, why don't you kind of conclude for them, even with the high rates, are we scared of a crash like 2008?
No, we're not, because one of the effects that the high interest rates is going to do is it's going to put us into a recession, but as a result of that recession, that brings interest rates down. So I mean, at some point, we might have, a little bad streak here, but at some point, because this correction is from inflation, at some point we're going to come out of it, and it's not going to be anywhere the magnitude of 2000.
There's way too many signs, low foreclosures, low defaults, so much equity still, so many different economic signs that isn't pointing towards a crash, that we're confident, even with a recession, I'm very confident that it's going to be a mini recession, right?
Yeah.
It's like we struggle for 3-4 months, but then next year as rates go down, that's all it's going to take for the confidence to come back, the buyers to come back. And because we have a 30,000 home shortage here in Utah, people still want that place to live. So don't be scared. It's going to happen. But if it changes anything, we will update you guys.
Definitely. We want to hear from you guys, so be sure to drop a comment with any questions, comments, agree with us, disagree. We love those too. Make sure we want to hear from you though. Like and subscribe.